I just as of recently, the last few trading days, purchased 100 shares of a brand new super ultra high yielding ETF. Now this ETF has become more and more popular as of recently, and even though the strategy offers a little bit of risk potentially, I think the potential for income generation from this single ETF could be amazing. So if you want to see which income-oriented, ultra-high yielding, 20% yielding at that ETF I just purchased 100 shares of, make sure to stick around, drop a link down below, and let's get right into it. Real quick for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So maybe by now some of you guys guessed it, but the position that I grabbed 100 shares of, a starting position at least, is the Defiance S&P 500 Target Income ETF, or SPYT, and as you can see right here, I bought 100 shares at around $19.82 per share. Now before I go through and share with you guys exactly why I decided to purchase 100 shares of this one, let's go through this ETF, explain how it works, what it has to offer, etc. So first off, SPYT is brought to us by Defiance ETFs. They have a ton of different products, of course. And it says right here, SPYT aims to achieve a target annual income of 20% in the S&P 500 using options paid out monthly. So far that sounds great. SPYT is an actively managed exchange-traded fund dedicated to generating current income. Our strategy revolves around holding shares of ETFs that track the S&P 500's performance and engaging in selling of daily credit call spreads on the index. So this is an actively managed ETF. There's going to be a lot of trading going on throughout the month, and because of these daily credit call spreads, this ETF is targeting 20% per year, which is pretty insane. It then says enhanced potential yield. Our option strategy involves selling a call option while simultaneously buying another call option at a higher strike price. By focusing on short-term options, we aim to offer an enhanced yield compared to traditional option-based strategies. Income generation. SPYT's investment approach is meticulously designed to generate income through option premiums derived from selling index call spreads, the primary driver of the fund's yield. We sell at the money or near the money call spreads to retain upside growth potential and aim for a target annual income level of 20%. Then lastly, it says trading. Each day, SPYT sells credit call spreads on the S&P 500, prioritizing options with near-term expirations, so short duration expirations. This is not like QYLD, this is not like JEPI, these are short-term, low-duration expiration dates. It then says this entails selling call options at or near the money strike prices and buying call options above the strike prices. Should the S&P value rise above the upper strike price, SPYT stands to profit from the further upside appreciation in the index's value. Now some more details about this fund. The inception date was back in March of 2024, and by this point, if you're an income-oriented dividend-focused investor, I'm sure you've heard about this one. Maybe it sort of caught your eye, maybe it hasn't, but for me personally, after doing more research, this one definitely at least caught my eye enough to start a starter position at 100 shares. Now net assets is pretty small relatively speaking still, 45 million, so this isn't necessarily some massive fund, although a lot of these style of ETFs are starting to get more and more popular. Now some more information on SPYT. The expense ratio is going to be pricey, but it definitely makes sense just knowing and going over how actively managed this ETF is. 0.94% expense ratio is sort of fair more or less. Now this ETF has not been trading all that long, but like we said, it's trying to return around 20% per year, which is massive. And since about March, this ETF, as far as price return goes, is down around 0.26%. So it has lost a tiny bit of value, but we're not seeing any sort of massive NAV decay, at least not as of yet. Now I say that because a lot of these ultra high yielders that yield say 12%, 14%, 20%, or even up to 80% plus, like some of the yield max ETFs, although they distribute so much as far as income goes on a monthly basis, some of these, they also have massive NAV decay, which makes the investment sort of more or less pointless, at least sometimes. But as long as the Defiance team can even have SPYT trade more or less sideways and have a lack of NAV decay, this ETF's target of 20% per year is going to be absolutely amazing. Now looking at the dividend history or the distribution history so far SPYT since inception has paid out a steady 34 cent, 32 cents, somewhere in around the 33-cent range, more or less, which if you take that and divide it by the price of this ETF, that is giving us around a 20% distribution, which is insane. Now, especially when it comes to some of these different ultra high yielders, I love it when the fund has sort of a distribution rate target where it tries to basically give the investors a steady return as far as distributions, return on capital, whatever the case might be, month after month. And SPYT is consistently paying investors, at least so far, around 33 cents, 34 cents every single month, which again, even if this ETF does trade sideways over the next year, this is going to be a massive return, relatively speaking, for investors that want a little bit more income a lot faster. But the real question is, how much has SPYT, at least since inception, actually returned investors as far as total return goes, as far as annualized gain goes? Well, even though we don't have that much time frame to go off, we have 0.45 years, SPYT, at least so far, is looking at around an 18.35% annualized gain, and this is with dividends being reinvested along the way. Now, with dividends not being reinvested, we're still talking a 17.4% annualized gain. Either way, in my opinion, even if this ETF averages out over time and pays investors an annualized gain of 12%, 14%, 15%, I still overall be more or less happy with that. But the next question, maybe the last question you guys are probably still wondering is that why in the world did I decide to buy 100 shares of SPYT? If you look through my portfolio, you wouldn't really necessarily think I'm much of an income investor, although I do have some more income oriented stocks and ETFs in here that aren't necessarily going to grow as much, but are going to pay a lot more income from day one. And that's exactly the reason. If you go through my entire portfolio, look at all my shares of Apple stock, look at all my shares of Realty Income, my shares of UPS, SCHD, etc. I want to have a nice balance of different income producers as well as different stocks ETFs that are also going to pay me income but also have upside potential. And this is because as far as my dividend investing strategy goes, I still want to get my monthly dividend income up as much as possible, as fast as possible, which side note, I did just surpass $7,000 on average in monthly dividend income, which is amazing, but I still am on a mission to raise my monthly dividend income on average as fast as possible, as safe as possible, which is why when I come across different new alternative strategies like SPYT, like SVOL, I personally don't think there's any problem whatsoever with utilizing 1%, 2% of your overall portfolio and utilize those if you want to. So now that we went over SPYT, I share with you guys why I purchased 100 shares of this one. I lastly want to hear from you guys down below. Is SPYT the Defiance S&P 500 Income Target ETF an ETF that we'll find in your portfolio? Let us know yes or no, why or why not in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.